Hello and welcome to yet another live session. And today we are going to talk about something red, right? When the market is falling, most of us don't like that fall. We are all disappointed, right? And we don't know what to do because everywhere there is bloodbath and there is so much of scares around that we don't know how to navigate that kind of market situation. So market and investing is all about having odds in our favor, right? When we are winning, we need to make sure that we are betting it high, and when we are losing, we need to make sure that we are hedging our bets. In today's session, that is the exact topic which we are going to cover. What if the world goes upside down? What if there is a bloodbath in the stock market? And what if there is some severe problem in the economy where the countries can default? We have seen countries like Argentina, we have seen countries like Turkey and a lot of small such countries which have faced tremendous problem, and even bigger countries have faced devaluation in their currency and so much of turmoil in their economic situation. How to get saved from all these situations? And the answer is gold. We are going to learn how gold hedging can help you in your investing journey, why gold is super important, and what are different ways to efficiently buy gold as an asset allocation instrument inside your portfolio. So if you are all ready, just type ready in the comment box and let's begin this session. Alright, so as I said, gold is a very powerful hedging instrument, and it helps you to protect from the downfall which is happening in the market. And I'll practically show you how this happens and what is the underlying logic behind this, right? So let me share the screen and show you one of the powerful chart of gold versus Nifty, right? So what you see in green, the green part is the gold part. It is a very long term chart. So right from year of 2000, we have got started into this journey, and we have compared what are the prices of gold adjusted. For USD, we have just taken an exchange rate and then we have converted O's into grams, and we have compared that with Nifty. Now, the key point which I want all of you to focus on is the drawdowns, right? There are events when Nifty fell crazily. Now, what are those events where Nifty was falling crazily? If you see the 2008 fall, so this is where there was a crazy fall in the Nifty. You can see this orange chart going down severely, and if you see, the gold was actually appreciating in that journey. Another fall which was somewhere around 2011-12, you can see again gold was going amazingly up into that journey. Another small fall that happened in 2016, the gold was into uptrend. And then one more severe fall that happened in COVID, right? We all remember COVID fall, and you can see how swiftly the gold was actually moving in that journey. So the point is, gold is a very powerful hedging mechanism when it comes to your investing journey. So we cannot ignore gold. A lot of people say that I'm an equity investor, I'll not pay attention to gold, and how does it even matter, and all those things. That is total wrong way of looking at gold. Okay, now let's try to understand what are different instruments, what are different ways in which we can invest into gold, and how can you benefit as an investor to take advantage of your portfolio allocation inside gold. So if you are all ready, let me share a powerful insight with all of you and share the strategy. So the first way, you might have seen people using gold as jewelry, right? Or the physical jewelry which a lot of women and men also wear these days. And that is where, one of the ways to have a position in your gold allocation is jewelry. You might have seen Bappi Lahiri and the kind of gold ornaments which he is wearing. So that nothing wrong about it. Some of the advantages and disadvantages are here. The first advantage is you can have that utility, right? You can show off in parties and marriages, and you can say, I am a cool guy, I am a rich person, and people will look up to you. Like I have seen a lot of people wearing this thick chains, and people literally look up to them, like seeing what is this guy. Okay, it could be positively or negatively impacting that person, but that is what it gives you, it's like a show off that gives you some kind of visibility. The second thing which is very important to note here is you spend almost like 10% in making charge. So when you go and make some gold jewelry, you go to a jeweler, you will easily incur those kind of charges, plus you incur GST also, around like 3% I think is the GST rate. You incur GST as well. And the bigger headache, if you have so much of gold, is where to store, right? Whether to store it in a locker or at home. Don't do that, okay? So beyond a point, it is a very, very big headache to store and safeguard it, and there is a lot of cost involved to it. So that is the first way of taking exposure to gold. Now the second way of taking exposure is your physical gold. Now what do we mean by physical gold? Physical gold is anything like this, a brick or a coin, or buying a gold physically, but you are not making it into jewelry. So this will not be helpful for you to create any kind of ornaments, but there are some advantages and disadvantages to this. So first advantage, as you might have rightly thought of, is there are no making charge, because it's just a bar or a coin, and the purity is generally guaranteed. You have a hallmark and a lot of these certifications on coins and bars which you are buying. So there is very less chance of any fudging that is going to happen in your purity. But again, there is a issue around storage, right? So you cannot store it easily. You need to pay GST also on top of it, and there is no utility. So you can even not show off in parties and marriage. That is the drawback of having a physical gold. But still, it gives you exposure. Now, a lot of people, I have seen in the social media and influencer world, they only talk about digital gold, and they say, don't buy physical gold and it is of no use and all those things. That is totally wrong. Because think about this, why we purchase gold? We purchase gold where there is bloodbath everywhere, where countries are defaulting, where entire economies are shaking off, when there is some big earthquake or flood or famine kind of situation, when there is some kind of cyber crime that is happening, something, devastating is happening all around us. And that is the true utility of gold. Now think about this. You have some gold digitally stored, but the stock exchange is closed because there is some earthquake in your country, or your economy is not stabilized properly, or even it's off market hours, there is some emergency and the market is closed, or you need money very, very quickly, like just in few seconds, and even your T+1 settlement will happen on the next day. So that is the reason at least some portion should be there in the form of physical gold, so that when there is actual emergency, you can actually dissolve it, get immediate money out of it. If this was bulb on, just type bulb on in the comment box if you have never thought about it. By the way, if you are not knowing me, I am Vivek Mashrani. I am Technofunda Investing Specialist, and I am basically looking after different kind of investment by blending the strategies of technicals and fundamentals. Okay, so that is what I am. And if you are finding it, when you are watching the recording of this live session, if you're finding it slightly slow, because that is how I like to explain, you can quickly speed up the entire video speed and you can watch it faster also. Now, once you have understood the jewelry and the physical part, so we have nailed down both the options which are available in the physical side of gold. The third option which is available, that is digital gold. Now, what is digital gold and how does it really matter, right? So the digital gold is where you can actually buy in a very, very small chunk. So I'll just show you how you can actually buy some of these things. This is like how you can buy. So on your Paytm or phone pay wallet, you can just go and buy. By the way, it is not a paid promotion of any of these platforms. I have not got any money from Paytm money or phone pay or anybody to speak, and this is not also a recommendation. Whatever I'm discussing is my perspective of how I think about investing. You need to get in touch with your advisors and take a right decision for yourself. But if you see in this thing also, what they are writing is, there is first of all no making charges, there is no theft because it is very secure and it is digital, and there are no storage fees, right? So pretty much you can buy and sell anytime, and you pretty much get the price which you have at that point of time. And same way, for gold coins also, now there are a lot of options available. When I said physical gold, you can actually buy it online. There are a lot of different options available with some of these jewelers. Again, not a recommendation, not a paid promotion. We have not got anything from Tanix or any of these players which we are discussing. Okay, so that is where the physical gold has had some traits, but digital gold, there are some of the powerful advantages. The first advantage is no making charges, right? So you don't actually make any jewelry, or you are not even touching that gold. It's just digitally stored somewhere. Whenever you want to buy and sell, you are getting that day's pricing, and that is it. The second thing is no storage issue, right? It's in the vault somewhere, and it is secured by the trustee and the management company who is storing that gold. And best part is liquidity, right? So if you want to like buy 1 gram or 100 rupees gold, 500 rupees gold, you can literally buy in a very, very small denomination, and you can sell in small denomination. Of course, the taxation and all those things will still remain, but it's a very efficient way to do a SIP and have that kind of storage. So that way, digital gold, of course, it is advantageous, but as I said, sometimes you need hard cash. You need to, like, in emergency, get something out of that gold. That is where physical gold is also important. So you need to have a balance of both the things, so that in case of emergency, use physical gold. In case of liquidity and all those things, you can use these kind of digital option. Now, apart from this digital gold, which are provided by multiple apps, you can explore PhonePe, a lot of Paytm money, and a lot of wallets also are providing. They have tied up with some of the gold companies, and they basically securely put that gold somewhere else and give you the exposure of that. Now, next is, ETF and mutual funds. What are these things doing, right? So there are a couple of listed ETFs which are available. So what they do is they basically store the gold, and they manage the ETF, the underlying, as a shares. Okay, and then they have gold mutual funds also. So there are a lot of mutual funds who take exposure of gold, and then they give units of mutual fund to you. Now, there is a problem over here. The problem is there is some kind of extra expense, right? Because they hire these fund managers and ETF managers, and you incur some additional costs. So I'll just show you how you can find some of these mutual funds and ETFs. So if you see this, and if I just press Control F gold, you'll see some of these gold bonds which are there, or ETFs which are there. And this is again not a recommendation. Again, thanks to Money Control, we are able to see this. So again, not a recommendation or anything. So now if you see in Canfin Gold Exchange Traded Fund, the asset size is just 39 crore, right? IDBI is just 70 crore. Invesco is just 33 crore. Only SBI ETF Gold is around like 2000 crore or so. But everything else is like very, very tiny. You will not see a major, ETF in the market. Like, it's very, very tiny asset size, like 1000 crore, 200 crore, 500 crore kind of asset class. So why this is happening? Can anyone tell me why this is happening? Why the AUMs or the asset size of all these ETFs are not that big? The problem is, one, because there is extra expense, and now because of recent amendment, there is no tax benefit also to this. Okay, so there are these two big disadvantages. And third, which we'll be discussing after that, that is SGB, which came in, and they entirely spoiled the party for ETFs and gold mutual funds. So it is not an ideal way. Just for the sake of some liquidity, and here and there, if you want to buy and sell, that is still fine. But it has low liquidity because of the asset size. There is no tax benefit after recent regulation which came in, and it also has extra expense attached to it. Around like 0.5% or so is the expense ratio generally for these kind of ETFs. You can again check that and see which is the best one if you want to take exposure, but definitely there is some expense attached to it. Okay. Now, if this is clear, just type super clear in the comment box. The next is the SGBs. What are SGBs? SGBs are called sovereign gold bonds, and these are nothing but guarantee contract by RBI and government backed contract, where they say, I am giving you contract of underlying gold. And this is where it gets really interesting. So there are some additional benefits, there are some additional advantages to buy these SGBs, the first and foremost advantage is it contains 2.5% interest every single year. So if you bought a bond of say 1,000 rupees, you get 2.5% on the 1,000 rupees of that bond amount, and then your capital appreciation keeps happening as per the increase in the price of the gold. Second is there is no expense, there is no GST, so you don't incur any additional expenses. If your broker is charging something, that is a different story, but ideally there is no expense of managing this entire bonds. There is no expense in terms of GST. Only drawback majorly is liquidity, right? So if a bond is listed few years or few months back, it's very thinly traded. So sometime when you go for sell, you might hit some few percentage in the bid ask spread, and that is a drawback of this. The prominent advantage after the recent regulation and the finance bill is that they are now very, very tax efficient, right? So if you hold this for 5 years, there is no tax, okay? There is no capital gains at all. And if you hold it for like till maturity, then even better. So you can actually hold this for long term and redeem it without incurring much of capital gains if you hold it for more than 5 years. And even more than 3 years, you get long term capital gains advantage. So you only pay 20% as a tax, not in a highest tax bracket if you are in 30 or more tax bracket if you are paying surcharge also. So that is another benefit for gold bonds, okay? Now, if you want to learn how to think about all these asset classes, this is just one part, okay? So gold hedging and your equity portfolio is just one part, but holistically you need to know what are different important things for your personal finance. So there is a video which I have created. It's called 10 Powerful Principles of Personal Finance. You can search in my YouTube channel. And there is one more very, very important video which I have created is called How to Budget, Save and Invest Money. And this will tell you importance of asset allocation, how to track your investments into real estate, into equity, into bonds, into gold, and how to efficiently do your budgeting and save money every single month and efficiently invest your money. So this is more like a tracker. I've also given you Excel template over there. So when you watch that video, make sure you download that Excel template also, so that you can actually month on month track all these different asset allocation and efficiently invest in your journey. Now, very important thing is buying gold, right? You need to have some strategy in terms of buying gold also. So let me show you something which I use personally in terms of that allocation if I want to really take exposure to gold. So see, if you want to invest in gold, there is no underlying fundamentals as such. It is very difficult to get a fundamental hold. So in that case, technical analysis only helps you. So what I've done is I've actually devised some indicators which gives me trend following strategies for gold also, right? So whenever the gold is into a trend, it actually becomes green. Then when it is falling, it actually becomes red. And again, when it is trending, it is giving me green signal. So this is where, I also optimize my gold buying to an extent. Again, whatever is my emergency gold and physical gold which is there, I don't touch that too much. But if I want to really hedge my portfolio and also, have some kind of exit and entry strategies over here, I basically use some of these technical tools to actually, mitigate that risk of drawdowns in the gold portfolio also, right? So there is a process which even I use in the stock portfolio, which is buying, adding and exit strategy. This is called system building, and this can help you to optimize your compounding. And even in those kind of reddish bloodbath market, it can help you actually get out very quickly in the initial stage of the fall. And when the entire market is bleeding, actually you can go into the cash also, right? So that is how holistically system building will help you in your investing journey. And if you want to learn some of these things, I'm conducting a free session. This is without any charges, which is technofunda.co/webinar. I'm sharing the link also in the description if you want to join that. It will be awesome experience. Okay, so that is it for today. Hope this session was useful, and make sure you like this video, hit the thumbs up if you like this overall different parameters in terms of how you can go about investing, what are different ways, what is the pros and cons of different methods of investing. If you understood this entire thing, just hit the like button and also subscribe to this channel. And SGBs also, as I said, some of you are asking how to get exposure to SGBs. All the SGBs are exchange traded. Okay, so you can actually go to exchange, just search on BSE or NSE SGB, and you will find all the options which are traded, right? So you can see like sovereign bond, gold bond, 2020 series, all these different series. You will be able to see the codes, and you can actually buy all these instruments online through your stock exchange. So that is how it is very efficient to buy and sell these instruments and to get exposure to gold. And overall, most important thing is to hedge your portfolio. Okay, so if this session was useful, glad that you liked it. Thank you so much. If you have any questions, please feel free to put inside the comment section. And if you want to watch any such important videos, please let me know what would you like to see and understand inside this channel, so that I can help you out in your investing journey. Thank you so much. Signing off, Vivek Mashrani here.